Hello, this is Alan, and in this video, I'm going to go over the trades that I took in the month of August. And it was a total of 5 trades. And I also want to go over a key instrumental adjustment that I made as a result of one of the trades that I took in the month of August. And I'll get to that in a bit. So we'll start with this short trade that I took on the EuroCAD. As you can see, price moved up to the yearly R1 and also hit the monthly midpoint pivot, which is the monthly M4. And price also moved up to the weekly R1 and bounced down from the weekly R1. And it also hit the previous daily R1. And value was found below the daily middle pivot. And then you short there. I took a short here, and you can see price made a precipitous drop to the downside. Very smooth drop. It dropped smoothly to the initial daily S1 target, and then it dropped further beyond that. And we didn't get caught up in, a lot of drawdown. We didn't have this arduous trading process where price threatens to hit the stop loss or anything like that. It was a smooth drop to the downside. Okay, and that's what we want. The quality of the quality of the trade is very important. Okay. This is a long trade that I took on the Euro Swiss. Okay, price dropped down and hit the YM2 and the monthly midpoint pivot, which is the monthly M0, and price also bounced up from the weekly S1. Okay, and it also hit the previous daily S levels, and value was found above the daily middle pivot and long here. You can see price did retrace, and price went against me for a bit, but then price moved up in the direction of value. So overall, the trade was a smooth process and a smooth move to the upside. Okay. And then I took a trade on CAD Swiss. This was a long trade on CAD Swiss, pretty much the same as the Euro Swiss trade. Price dropped down to the yearly S1 and came close to the monthly midpoint pivot, the monthly M0. Didn't quite hit it, but it did hit the monthly S2. Okay. And price also bounced up from the weekly S1, and it also hit the previous daily S levels there. And then value was found above the daily middle pivot, went long. Price did stay in a range a little bit, then eventually made its way to the upside in the direction of value. So a smooth trade, a smooth move to the upside overall without the arduous, ranging or threatening of taking the stop loss out. Okay. It was just a smooth, stress-free trade. And that's what we're looking for. Stress-free trades. The quality of the trade matters. Okay. So this trade that I took on the Euro TRY, which is the Turkish currency, this trade right here was a loss. Okay. This was the 4th trade that I took. And you can see right here, I have written, in this trade, all the rules were satisfied, but it lost. And all the rules were satisfied, right? Price moved up and hit the yearly R1. Then it hit the monthly R2. It also hit the weekly R1. It actually broke above the weekly R1 and came close to hitting the weekly R2. And price also hit the previous, and price also hit one of the previous daily R levels, okay? Then price found value below the daily middle pivot, but price did not reach the initial target of the daily S1. Then price retraced back up and stopped me out, okay? So what made this trade different than most of the trades I have taken is that price has broken way above the WR1, which is an extra strength trend, and entry is above the weekly R1, okay? So you see here, price breaks above the weekly R1, okay? And then the entry is above the weekly R1. This is the weekly R1 here. Price breaks above the weekly R1, and then the entry is above the weekly R1. And then you can see price then moves back to the upside and stops me out. This can be interpreted as trend continuation, which caused the short trade to lose, okay? So we have to remember the pivot progression logic, right? It says here, a move above the pivot point suggests strength with a target to the first resistance, okay? So a move above the pivot point suggests strength. So regular strength trend, right? With a target to the first resistance. Here is the logic for the key instrumental adjustment that I made. A break above first resistance shows even more strength, meaning extra strength trend, with a target to the second level resistance. So when price breaks far above this R1, that indicates extra strength trend, okay? Because it's even more strength with a target to the second resistance level, all right? So we don't want to take trades when price is in this extra strength trend mode. We don't want to take short trades when price is in this extra strength trend mode, meaning extra strength uptrend mode, because that can be interpreted as a strong uptrend and price can continue up, thereby derailing our short trade and causing us to lose the short trade, right? So that's what caused the trade to lose. The best option, the best scenario, is to wait for price to hit a weekly R1 and bounce down from that weekly R1, because that would be a regular strength trend and not an extra strength trend, okay? So as you can see here, after I get stopped out, price move, this is the new week, and you have the weekly R1 here. Price breaks above the weekly R1, right? And another trade opportunity presents itself here. I have written here, I didn't take this short trade because price has broken way above the weekly R1 and weekly R2, which is an extra strength trend, and entry is above the weekly R2. And as you can see, price broke way above the weekly R1, and based on that pivot progression logic, that is even more uptrend strength. So that is extra strength uptrend, right? And then price breaks above the weekly R2 and moves way further up above weekly R2. That would be considered even more uptrend strength, okay? With target to the weekly R3, okay? So now we have a very strong extra strength uptrend that we're dealing with. So when a short opportunity presents itself, when a short trade entry presents itself, it would behoove us to ignore this trade because we'll be shorting during a very strong extra strength uptrend, okay? And this can cause the trade to lose, and sure enough, price continued to the upside, okay? So you can see here, that would have been another trade loss. In this trade, however, price hits the WR1, the weekly R1, right here, and bounces down, which means this is just a regular strength trend, and entry is below the weekly R1. This retracement in a regular strength trend is interpreted as the uptrend weakening, since it is not an extra strength trend. So price drops nicely when I entered here. Value is found below the daily middle pivot, and you see a nice drop here. Okay? The reason why is in this upward move, as well as this upward move, they were both considered or interpreted as extra strength uptrends. However, here, price hits this weekly R1 and retraces, and it's interpreted as a regular strength uptrend. So we see now a weakening because this is not an extra strength uptrend anymore. It's a regular strength uptrend, and it's retracing after hitting the weekly R1. Okay? So the interpretation is that this uptrend is weakening. This uptrend is not an extra strength uptrend. It's a regular strength uptrend. So we're shorting when there's not an extra strength uptrend, but rather we're shorting when there's just a regular strength uptrend, okay? And that increases the chances of our trade being successful, okay? Mind you, this happened without the help of the yearly pivots. So I feel like the strongest trade that we have is when price is in a regular strength trend and it hits the weekly R1 and retraces, and value is found below the daily middle pivot at or around the yearly pivots and the monthly pivots above the monthly R1. I feel that if we can get a regular strength trend to bounce down from the weekly R1 and find value below the daily middle pivot at or around the yearly R levels and the monthly R levels above the monthly R1, we will have the strongest trade, and price should drop down precipitously. with minimal drawdown. And if you look at the EuroCAD short trade that I took, that's what happened. Price in the previous week here broke above the weekly R1 and kept on moving up. So that is an extra strength uptrend. Then it broke above the weekly R2. That's also an even stronger extra strength uptrend, right? And if a short opportunity were to present itself in this week, I should not take it because we would be shorting during an extra strength uptrend. Okay? But now, in the new week, price is moving up, but it gets rejected and bounces down from the weekly R1. So it is just a regular strength trend. And price drops down and finds value below the daily middle pivot. And all of this is happening at or around the yearly R1 and the monthly midpoint pivot, which is the monthly M4. And look at the drop that we get. I feel like this is the strongest trade. If we can now make an adjustment for that particular rule in the EA as well, I'm wondering if you can make the adjustment for that rule. Okay. And the rule would be price bounces down from weekly R1 and entry is below weekly R1, not above weekly R1. So I guess the challenge that I see here for the EA is, can we make the EA recognize that price is bouncing down from the weekly R1 and the entry is below weekly R1? If we can do that, then that would be wonderful. Then the EA will be able to match our discretion, our human eye discretion, okay? All right. So let's take a look at the other long trades, right? You can see the same thing happen with the Euro Swiss. Prices in the previous week breaks below the weekly S1. So now it's an extra strength downtrend, right? Now, if price broke below the weekly S1 and then immediately bounced back above the weekly S1, then we can consider that a bounce up from the weekly S1, right? But the fact that it broke below the weekly S1 and kept going and moved far below the weekly S1, we now see that as an extra strength downtrend. And if the entry is way below the weekly S1, that would mean that the entry is during an extra strength downtrend, and that will cause us to lose the trade. Okay? So if a trade opportunity presented itself here, I shouldn't take it. I should wait for price to move down in the new week. And you see how price hit the weekly S1 and bounced up from the weekly S1. Yep, it did break below the weekly S1, but you see that it got rejected and bounced up from the weekly S1, and then value was found above the daily middle pivot and above the weekly S1, so the trade entry is above the weekly S1. And that means that this is just a regular strength trend. Okay. So if it's just a regular strength downtrend, then we can safely take a long entry during this regular strength trend because it's just a regular strength downtrend, right? And all of this is happening at the yearly M2, which is a yearly midpoint pivot, and the monthly midpoint pivot, which is the monthly M0. Okay. And then we get that rise. And the same thing happened here. And I looked at all of the trades that I've taken with the 3-key system. And in the majority of the trades, the short trades are bouncing down from the weekly R1, meaning that it's a regular strength trend, a regular strength uptrend. And for the long trades, price is bouncing up from the weekly S1, meaning it's just a regular strength downtrend. Okay. So I believe that's a very, very key instrumental adjustment that we should make. It's a slight adjustment, but it makes a significant difference in trade performance. Okay. And I think that the accuracy will increase. And I believe that if there are certain months where trade opportunities are less and we want to increase the frequency of trades, then we can take trades without yearly pivots as long as price hits a weekly R1 or a weekly S1 level and bounces from those levels. So bounces down from the weekly R1 or bounces up from the weekly S1. I believe that we can still take those trades. And I've taken some trades without the help of the yearly pivot, and they performed well. Case in point, the Euro TRY, right? This did not have the yearly pivot help, yet it did very well. Okay. So let's see if we can incorporate that adjustment into the EA. If you can, that'd be great. Thank you so much. And that's pretty much it. And also the same logic goes for the downtrends, right? The converse is true on the downside. A move below the pivot point suggests weakness with a target to the first support level. And here's the key reason behind the adjustment that I made. A break below the first support level shows even more weakness, meaning more downtrend strength. So extra strength downtrend, okay, with a target to second support level. And obviously a break below the second support level means an even stronger extra strength downtrend, okay? And the target would be obviously the weekly S3, right?